Welcome to MegaTrade101.com's video presentation, and today is the 16th of September, and we're just a few hours away from the Fed's announcement whether the rates will be higher, as if it hasn't been priced in yet, neutral to no action at all, which we're actually anticipating because it has been in the limelight ever since they have announced such increase after a decade. At this point in time, we would like to show you a chart of the Dow Jones Industrial, where for the past couple of days it has been recovering, and it's pricing in at the 16,739 level, where the ideal recovery would be in the range between 17 and 17,100 range, from a high of 18,351 to a low of 15,370 as a result of the China contagion, where the stock market plunged dramatically, and it has now recovered from that particular decline. This is not just Forex alone, but we're looking at the price action analysis and market behavior across the board, starting off with the Dow Jones Industrial. The shaded channel here, as you could see, has been a straight major trend higher, where after establishing the 18,351 high last May 18 to be exact, and a low here at 15,370 just last August 24th to be exact, and the price recovery now is being made initially, since it's a Thursday, and whether the momentum would really increase. 16,800 would be the first target, where prices would sustain, and depending on tomorrow's follow through in the Asian market. So far, Asia have did made a mixed movement today with slight lower prices, and coming out from the expectations that the Fed may increase its rate, tantamounted the investors to be on the sideline while waiting for the particular announcement. Now, with that said, we would be looking at the US dollar index, which has been our main two indicators, including the Dow Jones. Now, with the US dollar index, as shown here in the chart, we have defined the most identifiable technical support that we could find, where price formation and patterns here, as you could see, after establishing the high of 100.39 basis points, the symmetrical triangle, which is in blue, which also serves as a blue pennant, the Andrews pitchfork, which is the light blue and green, prices are resting on the trendline support, while the rising channel, which is the yellow, that may transform itself into a bear flag with prices sliding, establishing the yellow, the most logical price movement that would occur, because the similarity of all these three such patterns, where prices are trading on the floor, which is basically the three support trend lines that we could identify at this point in time. Now, combining it with the Fibonacci timeline, This is where prices will be moving with the direction of a break on the high or on the low, depending on what the outcome would be on the Federal Reserve's decision as of today. But however, we still have today and tomorrow, which is a Friday. So more likely what may happen would be when prices makes a dramatic move higher, which is what we are anticipating on a short lead basis. However, the outlook here is more technically motivated after the Federal Reserve decision would be made. So, had it not been for an established previous low of 92.62, we would say that the tendency for prices is to move higher towards the end of the quarter. But however, any particular retracement back to closest to the 92.62 would be the most logical way of looking at how prices would be made towards the end of the third quarter. Because October, November, and December may tend to be moving on the high side as a continuation if and when such flag formation would be followed, because the apex here would not be filled in. It has to move before filling in any particular triangle formation. This is one of the idiosyncrasies of this formation as far as the US dollar index is concerned, and we shall be looking at its correlations with the other currencies and may probably even throw in the Brent crude oil as an additional outlook for the market. As you could see, we did not place any indicators on the bottom side of the chart simply because we would like to concentrate and focus on simply on price action and market behavior prior to the Fed's decision, and post decisions of the Fed we would also be following up this video. Now, considering the sterling pound, or cable as we used to call it, I would like to start by using a similar function for the trend line parallel support to establish rather a parallel support. In this particular, which we are actually doing right now, we're actually pausing for a while simply to show you an extension where you're looking now at a possibility that this particular price level at 1.5161 to 70 level, at this price is where we took a long position at 1.5170 level, and currently holding that position, although we also took out smaller increments of the contracts at the 1.55, 54, or rather 154 to 155 level prior to the 155.18 currently working right now. So far, if we try to anticipate a resistance level, we're looking at the 155.80, and we would like to draw a line in particular from the high. Let's see if we can get it here to the low, instead of using this high. We'll be extending it exactly on the body. We're doing this on a technical basis now, technical approach, and once we look at this, this would be at 1.5596, close to it. So looking at that levels, we're anticipating a pause. That is, if the US dollar index goes below the nearest to the 92.62 level, but we don't think that it would do so right now. So far we're looking at 1.5580 level, 156.10 range until the closing of Friday. Now with the euro dollar, it has the same more or less similar pattern as far as the triangle formation is concerned, and this is also one of the idiosyncrasies that we have made mention before that goes well hand in hand with euro and the cable. So that's why we normally use the euro sterling as our cross or the sterling euro as an arbitrage, if in case we can do similar cross trades between these markets. Now, going back with the euro, as you could see here, that this particular area already is on the high side. But this was due again because of the China contagion, where the dollar had moved lower, pushing the euro to the highest level of 1.17 at these levels. Now, currently, it's working at 1.1296, slightly higher. So we could say that this particular formation is already in the up move, where, as you could see, its previous resistance has now become a support, and the initial price recovery is in the making, simply because the length of this is on a technical basis, the length of this particular formation would then be the length where the closest price recovery would be back to the 115 levels. But looking at that, it should be that the dollar index would have to go much lower, simply back to the 90s. Correspondingly would provide you the equivalent of the movement of the euro as well as cable. Of course, give and take a few points, and that is why it is more important that traders would know the correlationship between the dollar, the euro, as well as the pound, which also would include the cross rates of the euro pound and the pound euro in case you need to do some strategies on the cross rates. That is why it is quite essential to know and keep track. What we have here is the price page indicator, which is actually a partial list that we have, where it shows the previous open, high, low, last, and closing for the month for the dollar on a quarterly basis, and excuse me, and whether it has a down corrective signal, steady, or a price recovery. This is basically where we're looking at the price behavior purely on a price analysis basis or price action basis, including cable and euro, keeping track of the high and low for each particular week and month provides us a better view without any bias, a better view of the market simply looking at prices and price action. Of course, this is not accessible to regular public viewing, but you have to be a premium member to be able to have access on this information and data. Now, with Brent crude oil, which is one of the most interesting uh, commodity to trade, where Goldman Sachs issued a previous forecast that the prices of oil would be on the $20 basis, where Brent now is working at the 45, rather 48.38, which is a correction here that established a high at 50.14, and previous to that was a registered high at 50.34, currently working now at the 4840 level, which is a correction of its particular movement yesterday, as though although it looks quite encouraging that this particular correction would be forming a negative outlook simply because there is conflicting reports on oil other than the glut or oversupply. The initial or the earlier report was also that there was already inventories are going down, but what remains is still the oversupply of oil. That is why this particular movement on the correction, without the continued rally on the stocks, it would be quite difficult for oil to go above the 50 level again, current low. But let's look at the exponential moving average, where it's in right smack at the moving average. Let's look at the Donchian channel, where the 4702 is actually what we're looking at. 4772 was our previous entry, getting out at the 4918 level and simply holding on until the Federal Reserve would be coming out with their report. It's better to play safe, not being in the market, and smart enough to know that the market will always be there. Well, at any rate, this is a bonus outlook for oil. We're still looking at a movement for oil in between these ranges of 51.66 and 47.02, and it's currently working at the 48.52 levels. Hopefully, this will be a good help for everyone, but again, it would be difficult to be catching the tail of the trend, and you'd rather be playing safe, be on the sideline, and wait for the report that may influence the dollar, the Dow, and obviously the correlated currencies and instruments that these major indicators are providing. Have a good day and have a wonderful weekend. Thank you.